Welcome to FinTech Frontiers, the podcast where we break down the most compelling issues in financial technology. I'm your host, Jeffin, and today we are diving deep into one of the most fascinating and controversial cryptocurrencies, Dogecoin. To help us break it all down, I'm joined with three experts who each bring a different perspective to the table. First, we have Neta.
Hi everyone, I'm Deta, a Dogecoin supporter who believes in its potential and community-driven ethos.
And then we have RC.
Hi, I'm RC. I'm a financial regulator that will walk you guys through the legal and regulatory challenge Dogecoin present.
And lastly, we have Omama.
Hi, I am Omama and I will bring you the financial incubus perspective of Dogecoin in the FinTech.
Thank you guys for joining. Let's begin by understanding how it all started. Data. Dogecoin was famously created in 2013 as a joke. How did it come into existence and what sets it apart from other cryptocurrencies?
Absolutely. You know what? As you said, Billy Marcus and Jackson Palmer created Dogecoin as a fun, approachable alternative to Bitcoin. Unlike Bitcoin's fixed 21 million supply, Dogecoin has no cap, making it better for transaction than long-term value storage. It also uses the scrape algorithm, allowing for faster transactions. What really sets Dogecoin apart is its community. Beyond speculation, it's been used for charity, tipping creators, and even funding sports teams.
That's a key point. The community has been driving force behind Dogecoin's longevity. But Dogecoin's unlimited supply raises an interesting question. Omama, from an industry perspective, how does Dogecoin's lack of hard supply cap affect its use as a currency compared to Bitcoin or even fiat money?
That's a great question. In traditional economics, inflation can help keep money moving because people are less likely to hoard it. That's why central banks control inflation in national currencies. Dogecoin works in a similar way, as Zeta mentioned, with a continuous supply. However, since Dogecoin does not have a supply limit, it struggles to hold it into its value over the time. Bitcoin, for example, is often called digital gold precisely because there is a fixed amount of it, or what we call a limited supply. But Dogecoin doesn't have that benefit. Its inflationary model means that if demand doesn't keep increasing enough at a strong pace, its value can drop over time. That's why most banks have continued cautiously exploring crypto, but only focus on Bitcoin and Ethereum, just not Dogecoin. Take the Dutch Bank in Germany as an example. They are working on digital assets custody, but they are focusing more on stable crypto that have stronger institutional support.
But isn't that a good thing? One of the criticisms of Bitcoin is that it's not really being used as a currency. It's just a speculative asset people hold on to. Dogecoin, on the other hand, is actually used. People buy things with it and it circulates in a way that Bitcoin often doesn't.
That's true to some extent, but the issue whether businesses and institutions will trust a currency that doesn't have a long-term value stability. Fiat currencies like the dollar or euro are inflationary, also experience inflation, but central banks can step into it and manage and prevent extreme inflation cases. With Dogecoin, there is no central control or monetary policy.
And from a regulatory standpoint, that creates challenge. If Dogecoin were to be widely adopted, how will financial institutions handle it? Without a government body, there's no one to regulate monetary policy, prevent fraud, or even enforce compliance with financial laws.
I get that concern, but isn't decentralization part of the appeal? The whole point of cryptocurrencies is to operate outside the traditional financial system. If we introduce regulatory oversight and monetary policies, doesn't that just turn Dogecoin into another version of fiat currency?
I see where you're coming from, but let's be realistic. If Dogecoin wants to be seriously outside of online communities, it needs some level of oversight and regulation. Businesses will not adopt something they see as unreliable or unstable.
And regulators won't let it scale without safeguard. If Dogecoin were to become a major currency, regulators would have to step in to establish compliance measures. Otherwise, it will be a breeding ground for financial crimes.
So what's the solution? Can we find a middle ground where Dogecoin remains decentralized but still meets regulatory standards?
That's the big question, isn't it? Perhaps the answer lies in voluntary compliance, where exchanges and payment processors create safeguards without imposing direct government control. Now that we have covered Dogecoin's origins and its fundamental characteristic, let's move into how it fits with larger fintech ecosystem. Oh, Mama, from a traditional finance perspective, how does Dogecoin role evolve beyond just being a tipping currency?
That's an interesting point. Dogecoin started as a fun community driven, as we said, but over time, some businesses have experience with it. However, the role in traditional finance is still very limited. Most of its acceptance in the US, while other countries have stricter regulation that make it much harder for Dogecoin and meme coin in general to gain traction. So let's talk about Tesla. Their decision to accept Dogecoin for certain products made headlines, but let's be honest, it wasn't a big financial move. This was mainly driven by Elon Musk's personal support for Dogecoin, not because Tesla seen it as a serious payment system. They didn't accept it for car purchases, just for selected Tesla branded projects like accessories and a smaller gadget. That alone shows that even the biggest company linked to Dogecoin does not fully commit to it. And that's a big risk because what happens if Elon Musk lost interest? Yes, we have business like AMC Theater and Newegg accept Dogecoin for payment, but they don't actually hold into it. Instead, they use third payment processor like BitPay, which immediately convert Dogecoin into traditional currency. So they are not really accepting Dogecoin like they do on cash or credit card. They're just giving people who enjoy it a way to use it while shifting the risk to somewhere else.
That's an interesting point. But Data, as a strong supporter of Dogecoin, do you see its adoption growing in mainstream commerce?
Absolutely, and it's already happening. While Dogecoin isn't as integrated as Bitcoin, its adoption is growing thanks to accessibility and a strong community. Its biggest advantage, speed and low fees. Unlike Bitcoin's costly, slow transaction, Dogecoin process payment quickly and affordably, perfect for microtransactions. But what really sets Dogecoin apart is its pop culture influence. When Elon Musk tweets, the world listens. This exposure pushed business to experiment with it, like SpaceX Doge One mission, the first space mission funded entirely by Dogecoin.
That's where I have to push back. From a regulatory perspective, this is exactly the problem. Dogecoin is highly speculative and heavily driven by social media influencer, rather than real financial use cases. Financial institutions and regulators will have concern over its volatility. Dogecoin price swing dramatically based on market hype. Financial institutions will not accept a currency that can spike 100% in value just because of a tweet. Additionally, consumer protection is another issue. Businesses that adopt Dogecoin must consider the risk. What if its value crashes overnight? How does payment will be handled?
I see what you're saying, but I'd argue that volatility is part of the growing pains of any emerging financial technology. Look at Bitcoin. It was once dismissed as too volatile, but now you see major financial institutions are holding it as a long-term asset. Dogecoin is still in that phase of maturing, but its utility as a payment method is undeniable. If businesses are willing to take the risk, and clearly some are, then it means there's a demand. Companies like BitPay and Coinbase Commerce have already added support for Dogecoin payment, showing that the infrastructure is starting to form.
That's true to some extent, but financial institutions are cautious for a reason. Dogecoin does not yet offer a strong value beyond small transactions. For banks to integrate a currency, they need a solid economic reason to do so. Right now, Dogecoin's biggest benefits are low fees and fast transaction. But is that really enough to make banks and payment processors take it seriously?
Data, do you think if Dogecoin had more financial infrastructure around it, like stable price mechanism or better security protocols, it will be taken more seriously?
Yes, and I think that's the next logical step, right? Dogecoin needs more integration with financial products, whether that's through DeFi platforms, payment processors, or merchant adoption program. If it can develop a stable ecosystem around it, business and financial institutions will have fewer concern about volatility. One solution, layer 2 network to speed up transaction and lower costs or pegging mechanism to reduce price fluctuations, making Dogecoin more reliable for everyday use.
But that would also require more regulation, which takes us back to the challenge of balancing decentralization with compliance. If Dogecoin community wants it to be taken seriously, it will have to accept some level of oversight to make it viable at a larger scale.
Exactly. The idea that Dogecoin can remain completely decentralized while also being trusted financial tool is not realistic. If it wants to move beyond its meme status, it needs financial incubant support, and that will not happen without safeguards in place.
It sounds like we have reached some common grounds here. All right, guys, stay tuned for part two. Now we're back on part two. We will talk about regulatory concerns. RC, as a financial regulator, what are the primary concerns regulators have when looking at Dogecoin?
From a regulatory standpoint, volatility will be considered as primary concern. Another key issue is consumer protection. Dogecoin has no central authority to protect consumers. This can make users more vulnerable to market manipulation, like Ponzi schemes and fraudulent activities. Additionally, regulatory bodies such as the European Union MiCA have started implementing clearer guidelines for digital assets. In contrast, regions like the United States and the UK still lack a cohesive regulatory framework. The UK's Financial Conduct Authority, or FCA, has warned that crypto assets remain largely unregulated, while in the US, cryptocurrency holdings are not insured, increasing financial risk for investors.
That's an important perspective. Obama, from an industry standpoint, how do financial institutions perceive these regulatory concerns?
Well, that's definitely a big factor to consider. For Dogecoin to be used in finance sector, there is need to be ways to manage the risk, like risk management strategy. A bank and financial institution would need tools like insurance, backup funds, or safety measures to handle its price swings. Bitcoin have achieved institutional adoption partially because these kinds of risk mitigation tools, and Dogecoin would need something similar to be taken seriously. Security is another consideration. Large financial firms like BNY Mellon and JP Morgan have created secure ways to store digital assets, which could be model for Dogecoin, but without a clear regulatory classification, whether as a commodity, security, or payment instrument, institution would remain cautious.
That's exactly why people are drawn to Dogecoin. Crypto was built for financial freedom, not reliance on banks. While regulation matter, not all investors want centralized oversight. Decentralization fuels innovation and accessibility. Unlike traditional finance with its barriers, Dogecoin lets anyone participate without needing approval. Security risks exist, but education and self-custody are better solution than over-regulation.
While decentralization has benefits, the risk can be ignored, I think. Reports from London-based blockchain analyst firm Leipzig indicate that Dogecoin has been used in illicit activities, including Ponzi scheme and cybercrimes. This highlights the needs for some level of oversight to prevent bad actors from exploiting the systems.
That seems to be the crux of the issue. RC, are there specific measures regulators could take to mitigate risk without fully undermining decentralization?
Yes, there are several approaches. One widely considered method is focusing regulation on crypto exchange rather than the cryptocurrency itself. By requiring exchanges that facilitate Dogecoin transactions to comply with KYC and AML laws, authorities can monitor transactions for suspicious activity without directly interfering with the coin's decentralized structure. Another strategy is self-regulation within the Dogecoin community. If major wallet provides, payment processor, and exchange voluntary adopt best practice for security and fraud prevention. It could create a safer ecosystem for users while avoiding heavy-handed government intervention.
That approach makes sense. Some exchanges are already stepping up their security measures by closely monitoring transactions and following stricter compliance rule. If Dogecoin community wants to get it into traditional finance system, following these industry standards, even voluntarily, could help bridge the gap between decentralization and institutional trust.
That seems like reasonable compromise. Data, how do you feel about the idea of self-regulation as a way to maintain Dogecoin's decentralized ethos while addressing security concerns.
I think self-regulation is a practical solution. The Dogecoin community has always been proactive, and if taking certain steps such as better security measures on wallets and exchange help Dogecoin gain credibility, then it's worth considering, right? The important thing is that these measures should not compromise accessibility for or financial freedom for users who rely on Dogecoin as an open and permissionless currency.
That makes sense. Financial institutions need clarity before they can fully engage with Dogecoin. Data from a supporter perspective again, do you think Dogecoin can maintain its decentralized nature while adapting to regulatory expectations?
Dogecoin can stay decentralized while meeting regulation through community-driven efforts and voluntary compliance, I think. Its public blockchain ensures transparency, and if exchange adopts strong security measures, trust can grow without sacrificing decentralization, but too much regulation could slow its growth. The key is finding a balance, protecting users and ensuring stability without limiting accessibility.
That's a valid point, but self-regulation alone may not be sufficient. If those coins start integrating layer 2 solution and smart contract, regulators might classify it differently under existing legal framework. For instance, if Dogecoin move beyond being a simple payment mechanism into DeFi application, it could fall under securities regulation, subjecting it to stricter oversight.
That uncertainty is exactly why financial institutions are hesitant. If global regulators create more specific guidelines like MiCA in Europe, it could help financial institutions feel more confident about engaging with Dogecoin. In fact, some of these regulations already include specific rules to high-risk assets like meme coin, recognizing their price swing and speculation. So having specific rules for meme coins could help them gain more trust. Interestingly, while Western countries are still formulating their approaches, Asia has seen strong activity, with around 80 of meme coin trading happening during Asian market hours. But regulations are different across regions. In 2021, Thailand Security and Exchange Commission banned meme coins, saying they lack a clear purpose and were too influenced by social media. We can see the gap here between growing interest and strict rules that shows the challenge meme coins face worldwide.
So it sounds like the future of Dogecoin depends on how well it can balance decentralization with regulatory requirements. We have explored Dogecoin history, its role in fintech ecosystem, its regulatory challenges, and its potential future in mainstream finance. Now, as we wrap up, I'd like to hear from each of you your final thoughts. Where do you see Dogecoins heading in the coming years? Let's start with data.
Yeah, for me, Dogecoin stands out in the crypto world for its community-driven approach and ease of use. Originally as a joke, it has grown into a resilient cryptocurrency, gaining adoption for payments and attracting major business interests. Its future depends on evolving while staying decentralized. If the community pushes for stronger security and wider adoption, Dogecoin could remain a key player in microtransactions and everyday payments.
That's an optimistic perspective. But Mama, do you think Dogecoin has the necessary financial structure or foundation to be a serious player in global finance?
Well, Dogecoin has a strong grassroots support, which is great. It's fun and community-driven asset, which adds something unique to the fintech space. But from perspective of financial acumen, it's still lag behind. For now, it's a niche cryptocurrency, easy to use, but with limited financial institution backing.
That brings us to regulatory perspective. RC, do you think Dogecoin will face stricter regulations, and how might it impact its future?
Regulation is inevitable as Dogecoin and other cryptocurrencies gain popularity. Governments will require AML, KYC, and financial security as more firms and individuals utilize Dogecoin. Which is still in the gray area, I think, of financial legislation. The primary challenge now will be to maintain the balance between the decentralized appeal of Dogecoin and regulatory monitoring.
It sounds like regulation will play a defining role whether Dogecoin remains a widely used digital currency or becomes restricted by legal barriers. Thank you, Deta, RC, and Omama for sharing your insights today. And to our listeners, thank you for joining us in this deep dive into Dogecoin. If you enjoyed this episode, make sure to subscribe for more discussion on the latest trend in fintech and digital currencies. Until next time. This is Jeffin signing off.
Yeah, bye.
Bye-bye.